For Morningstar, I'm Jeremy Glazer. Joined today by Katie Reichart. She's an associate director in our manager research group. We're going to look at Fidelity's first half of 2016. Katie, thanks so much for joining me.
Thanks for having me.
So let's start with performance. Overall, how has the Fidelity fund family performed so far this year?
Yeah, well, we looked year to date through June 30th, and generally international equity and fixed income, over half the funds in those asset classes outperform their category averages. For diversified U.S. equity funds, it was about 40%, so a little worse there.
So looking at some notable funds that did well, what were some of the highlights there?
I had mentioned Fidelity New Millennium and Fidelity Mid-Cap SAC, which are both run by John Roth, and they were in the top 5% of their categories for the first half of the year. He had a bet on energy, so that's obviously played out pretty well this year, although he was a little early, so that did dim performance last year.
So better oil prices helping there. Anything that kind of lagged maybe more than people were expecting?
Well, Fidelity OTC was one that was down over 6% for the year to date. It got hammered in the first quarter with the biotech and tech sell-off, but it did also underperform its NASDAQ benchmark. So I think that's one where you kind of know what you're getting. It's going to be a little more volatile, especially in down markets.
And then looking at maybe Fidelity Contra Fund or some of the other more widely held funds, how did they hold up?
Mm-hmm. Fidelity Contra Fund, it's about in the 42nd percentile year to date. It's had some financials and consumer picks hurting it a little bit, but long term it still is a standout fund. It's rated silver.
And low price stock?
And that one has a big international stake, about a third of its assets. So that's been a headwind this year, but also a good long-term pick.
So one of the big news items to come out of Fidelity this year was that they lowered the fees on their index funds, lower than Vanguard in many cases. What's driving this? Is this just competitive pressure? Is it change in strategy? Why do you think they're lowering fees here?
Well, I think with index funds, it's a commodity item. It's kind of a race to the bottom with expenses. And I think they want to be able to say they're the lowest cost provider out there. You see investors flocking to Vanguard because they're kind of known as the low cost provider, but Fidelity has long had a lot of competitive prices on their index funds.
Now, they lowered the price on mostly kind of the plain vanilla index funds, but also launched some more strategic beta factor-based funds. Why did they decide to move into this space?
Fidelity's been building up its ETF business the past few years. They partnered with BlackRock a few years ago. And I think now, longer term, they're looking to really expand that business with some of these strategic beta funds, and longer term, probably some more solutions-based types of investments.
So when you say solutions-based, is this really a change in strategy for them? Do you think you're going to see more of these kind of fund launches, or is it just trying to fill out the product offering?
I think they're really trying to kind of catch up in a way in the ETF space. They were a little bit behind with some of these things, so I think that's driving a lot of it now.
So taking a look at kind of our take on a lot of the Fidelity funds, we did have a few ratings changes so far in 2016. Can you walk us through what some of those were?
Sure. Well, we did upgrade the Freedom funds, the target date series, from neutral to bronze. And, that's one of the oldest target date series. It had languished a bit. They really set the reset button a few years ago. And I think now that we're about 3 years into those changes, we think it has pretty good long-term prospects. So we raised the rating there to bronze.
Were there any downgrades?
We did downgrade Fidelity Capital Appreciation, mostly because it's been pretty volatile. So in risk-adjusted terms, it's not quite as attractive. And we also downgraded Fidelity High Income from gold to silver. We still think very strongly of it, but just due to the analyst team, the experience level there, it caused us to go down one notch.
So overall, no kind of major shifts in Fidelity strategy or performance for the year.
Exactly, pretty steady.
Well, Katie, I certainly appreciate you taking the time today.
Thanks for having me.
For Morningstar, I'm Jeremy Glazer. Thanks for watching.